This is your Ichimoku Cloud update for Monday, August the 2nd, 2010. And we're looking at the S&P 500 daily cloud chart. Looking back over here on the three big moves that happened, starting back here, this was one big move down. Here is a rebound with this blip here. So the big move down, rebound, big move down again, rebound, and so many times I've seen there's a move of three. This is where the third move started, but it doesn't finish. It turns around and starts to move up here into the cloud. If you look here at this blue line, this is the Tenkan line. This is similar to a 9-day moving average. So now is the time when we're getting into some trades early, and we bought US steel, and I expect us to be up, considering the pre-market is up considerably, as well as being up on the call options as well. Here's the daily chart on US steel. Back here when I was looking at it, it had made much too big of a move straight up into the cloud like that. There's no way I thought it would go straight up here. I just didn't see that happening, so I wanted to buy on a pullback, and that's what we did. And now we're looking at the 240-minute chart on US steel, and right here is where we bought. This is called a hammer candle right here. You can see this thin line here. The red part is the open and the close, and then you have the high and the low. So when you have this candle like this, it's sort of like a V type pattern in the day usually, and it's usually better if this candle is red, just like the opposite candle up here, green at the top. This has a bigger body, but when you see something like this at a top and something like this at a bottom, it's usually a sign of the last people who were scared get out, and that's when it's time to buy. And up here, the people who just couldn't wait to buy were buying, and that's when you don't want to be buying. So right now we're basically going to be trading US steel based on the 240-minute cloud. So we're still in, and we should be profitable by the time you're watching this video. Here's gold. This is the daily chart of gold. You may remember in the video last week we were right here at this candle. I said I didn't like gold, just looked too weak here coming down on this cloud, and the momentum readings also were not good, and it falls down for a couple of days. But now we're trading below the cloud, so even though you might see some temporary rallies in gold, it's not really a place that I want to be trading underneath the daily cloud. It would be something more for day trading or some very short-term swing trading, but for me personally, I like to trade things like we are back here and get these types of moves above the cloud rather than being here and then trying to grasp for little miniature moves. Here's a stock that's worth paying attention to. This is Baidu, the internet search engine in China. This is the daily chart. Going back, this is when Google had their problems, and then Baidu took off. And this was something that was a bit off the radar for a while. But here, the daily chart looks good. It's a little bit above the cloud here. I would prefer something closer to the cloud. And here is the 240-minute chart of Baidu, also trading above the cloud. This has a market capitalization of 28 billion compared to 154 billion for Google. One of the interesting things that's happening with Google right now is, you probably remember about 10 years ago on web pages there would be these banners, and people would click these banners, and that's how a lot of the internet advertising was done. Now on Google you'll see something like, okay, I just brought it up here. If you type in something like stock trading, you'll see all these links here over on the right hand side, and then you'll also see here on the left hand side. I'll just bring it a bit more into view here. These are sponsored up here, and then these are also sponsored on the right hand side, and then these ones here are what is called organic growth, which is, you don't pay for it, you just have thousands and thousands of web pages out there, and you just get these high rankings. What's interesting about that, and here's the daily chart of Google now, right at the bottom of the cloud. What's interesting is the research that I saw shows that a lot less people are clicking those ads now. They know they're sponsored, And I think for some reason there's a type of psychological impact when people see a sponsored ad. They think, well, maybe, I don't want to send Google the money. So they're rich enough as it is, and I'm just not going to bother. And I think that could be something happening here with Google, where even if the revenue increases, it could increase at a slower rate. And that's one of the methodologies I use on stocks. So I'm starting to think that, this may be some slowing growth here for Google. Here's a weekly chart for Google I don't look at too often because it's just such a long time frame. And it's coming down into the cloud here. And this isn't really a great candle. It's not that bullish. And 240-minute cloud now for Google, trading above the cloud, but it's really not one of my favorite stocks at all, with a market capitalization of 150 billion. Makes it one of the biggest companies in the world. And there's very, very few companies that are over 200 billion. Even Cisco Systems right here, you look at the market capitalization. This is the amount of total shares outstanding times the price times the value of the company at any given time. 131 billion. Cisco had a market capitalization of 600 billion in the 99 to 2000 area, one of those 2 years. And they're making a lot more money now than they did back then. But as you can see, the stock is still down over 75% just because of the revenue growth rate. Never kept up with the anticipations. And I mean, how could it? They would have wired the entire planet and it couldn't have kept up with that growth rate. For currencies, I'll often go to forexfactory.com. This is a list of all the reports that are going to come out and what currencies they'll affect and the anticipated importance of the effect on the currency. So as you can see today, US dollar, a lot happening here. But if I was to look at the charts, the US dollar is really bad. And here we have the daily chart of the euro. We had profits last week on this of 85 pips. And that was for a small group of people that trade with me. If you're interested in trading Forex, there's also going to be a link that I'll place in today's updates in stocks and options. Here's a 60-minute chart of the euro, still trading above the cloud. We actually got out. We were stopped out last week at about 1.3015, I think it was, and that was right around here, just because it was just too much weakness. I wanted to lock in profits because I didn't want to be up over 100 pips and take into account a 200 or 300 pip volatility in the pair, and all of a sudden being a loss and have something happen. So when I have the profits, I like to tighten them up, tighten up the stops. Let's look quickly at the daily chart of the Australian dollar. Let's go way back here though to last year, 2010, 93, and 93, and here we are, 91, moving up here. I can't really imagine that it could rally past this amount. I mean, look back here, the massive resistance here, resistance. It's not really technical resistance, it's just more psychological. I can go back here, even before 2010. This is 2010, early, and then this is the year before, right around 93, 94, 93, 94. Really similar actually to the US-Canadian pair. Once the US dollar is only worth $1 Canadian, it really doesn't like to go below $1. And so it seems to be the same thing with the Aussie, right around this. If it gets up here to 93, it might look for some very short-term weakness to see if we can get a move back down, which is a trade that I really don't ever normally do, is shorting these big peaks. But on something like this, where I've seen it so many times before here, boom, 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 93, 94, it's certainly something that we have to look at. And that's today's update. Thank you.